Hello, friends. It has been an extremely volatile period for investors as we see the major indexes rebounding off their 52 weeks low and at one point seemed like charting back to higher highs. For Nasdaq 100, it has retested above 15,200 and Nasdaq index to have retested above 14,600. That's the German index at one point retested above 14,800 only to be hit back by comments from Federal Reserve Governor comments on a more hawkish approach to tackling inflation. Same for Nasdaq 100 and Nasdaq, which fall to around 13,940 and 13,371 respectively. Both of these US indexes have fallen by around 8 to 10%. So, could we say that the decision by Federal Reserve is a major turning point to assess if we are keen to invest in any particular stock right now? Yes, it is. Though we have to go back to basic and focus on those companies that generate good cash flow, have good growth prospect, and having a solid balance sheet as a way to hedge the risk because volatility will always be there in the financial markets. Is how we manage the risk by investing high conviction stock with good growth prospects and solid balance sheet. I will touch on this later on a list of US equity stocks that I am monitoring and putting on my watch list. Back to our original question. So what do Federal Reserve look at? They definitely look at job employment data as well as inflation data. Job data isn't too much of a worry right now, and instead, numerous news on record high inflation have been seen all around us. Here is the chart on inflation month on month. After seemingly coming down in January 2022, the inflation seems to have peaked in January. However, we do know that in February and March 2022, such CPI data jumped to higher high to 1.2% in March 2022. The saving grace is, after stripping out energy and food prices, it seems that CPI excluding such items has stabilized to around 0.3% month on month. So, market initially did express excitement to say that potentially inflation has peaked. Reason why market expressed initial excitement is that they are hoping that having inflation peak in March 2022, there might be a possibility that Federal Reserve may not be as aggressive as what they have been saying. Rally eventually dies off by end of the day with a fall of around 50 points. A logical question would be whether the market has already anticipated a very aggressive Fed. There is the possibility for this, but being at the support level for the major US indexes like S&P, Nasdaq, Nasdaq 100, and even European markets like DAX, it makes sense for me to only add high conviction stocks carefully at such price level because any break of support level could mean another step or a few steps down in terms of price level. I am watching Sea Limited, Snap, Zoom, Upstart, and Square share prices very closely, but I'm not intending to add in the near term until their 1Q 2022 results are out for me to make an assessment. The good thing as an individual investor is that I always use my cash holding as my risk management tool. Why? Because I don't have to be like a long only fund that requires they themselves to be fully invested at all times. So if I feel less confident of the market, I will increase my cash holding. Do subscribe to my YouTube channel and do give a like if you like this video. As always, this should not be construed as any investment or trading advice. Thank you.